Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. Starting off with equities, in the video on the 28th of June, I noted that Hermes is not looking good, potentially forming a cup and handle top. Now you see that price action has failed to hold above the cloud twice and is now trading below the cloud, suggesting that downside bias has prevailed. Price action has also closed below the 2097 support. This completes the bearish pattern that has a textbook target at 1239.5. There are supports at 1895 as well as 1639 that can bounce price action higher when tested. But also note over here, we can see that price action has overextended below the lower Bollinger. So I believe the next 1 to 3 days move for Hermes is likely to be higher first as a correction. This move upward is likely to be rejected by either of the cloud resistances around 2316 and or 2416 to resume the downside for Hermes. Moving on to FX, I highlighted on the 7th of July that dollar Swiss may be forming a falling wedge. This bullish pattern was completed on the 28th of July, and the breakout has since tested the Ichimoku cloud and was rejected on the 1st of August. Now note that on the 30th of July and the 31st of July, price action overextended above the upper Bollinger, so there is no surprise that in the coming 1 to 3 days, the first day being the 1st of August, and there's possibly 2 more days of decline. This is just a correction of overextension above the upper Bollinger. And also remember, after pattern completions, declines are just part of the correction phase. Downside, I expect to bounce off the resistance trend line to resume the upside. Textbook target resulting from this falling wedge is at 0.8533. There are resistances at 0.8476 as well as 8347 that can reject dollar Swiss lower when tested. And moving on to names that I will no longer be covering in future videos, the first one is on Lockheed Martin. I cautioned the potential formation of a double bottom on the 28th of April, but this bullish pattern was eventually invalidated after Lockheed Martin over here fell below 418.68. I will also be ceasing coverage on Meta platforms, also known as Facebook, going forward. The double top that I suggested on the 21st of July has been invalidated this week after price action broke above 747.9. Now note that price action on 31st of July on the daily chart over here, this is a major gap up. So I expect the next move for Meta to be lower, either fully or partially filling this gap up. Lastly, I will cease coverage on Philip Morris. I began coverage on this name on the 30th of June and noted the formation of a rising wedge that has a textbook target at 158. This target was 100% reached on the 28th of July. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.